This week's advance report from McGowan Group Wealth Management. We are going to cover three important subjects. Alex, what's on your mind?
SpaceX IPO came late last week. The AI data center build-out driven rally. What's going on in the software space? And energy, is it over yet?
Join us for this week's podcast. Be sure to subscribe because you don't want to miss the insights from Alex Tolene and Spencer McGowan. Investors, tycoons, and business leaders, welcome to the June 22nd, 2026 Advance Report for McGowan Group clients, prepared for you by McGowan Group Wealth Management from our galactic headquarters here at the Crescent in Dallas. As usual, I'm joined by Alex Tolene, radiating excellence and brilliance to bring you insights. And the huge question of the week, SpaceX.
Should I buy SpaceX?
Should I buy SpaceX?
It's only 125 times sales.
125 times revenue.
Yeah. What could possibly go wrong?
$2.5 trillion market cap.
As Papa Dean would say.
That's expensive.
Yeah, as Papa Dean would say.
They have 20 billion in sales.
You can avoid most of your mistakes by buying companies that make money.
Okay, so
I'm sticking to that.
I got to cover some numbers.
Okay.
Well, the AI build out was in danger. It was something that we brought to you. This is why you should subscribe. Better yet, become a client of McGowan Group Wealth Management, because the insight we brought was OpenAI. They needed $150 billion and they weren't going to make money until 2030. And I think that's still true.
Yeah.
Maybe sooner. I don't know. But one of the questions for this week, when are the investors going to get paid? Where are the customer yachts? Right? Because if SpaceX is going to projected to lose money again next year,
yeah,
right? They claim to be cash flow positive. But as soon as Musk got his $85 billion,
he goes and spends 60 of it.
60 right then on Cursor, the competitor that will make Grok better.
But
And
better
so,
than at least compete with Claude.
4 kids in their mid-20s that went to MIT,
Smart.
Interned with financial companies and Google, and they actually, they're worth $5.5 billion each because Cursor got $60 billion of the IPO money.
Yeah.
Right there. Well,
Yeah.
They're going to pay in stock, by the way.
That's right.
So there's more shares outstanding. Well, if I'm 25 years old and I get $5.5 billion, I'm going to want to sell some of the shares they paid me in, right? There's some selling pressure potentially because now I got 5.5 billion, but I live in some little apartment probably in San Francisco. And what do I want? I want a big old house on the ocean right there. And
Yeah. And
maybe move to San Jose or something.
if you remember when Tesla came public, it had multiple times when it was down 50%, really made its big run when it turned profitable. And so one of the things that we'll look for SpaceX and for AI in general is when do they make that turn to profitability? What will that growth rate and earnings per share be? And how will customers and
Benefit.
stockholders actually be net beneficiaries?
When do I get my check?
That's right.
Right?
So that's
They got
what
their
we're
checks.
watching for. That's what we're watching for.
All right, well, this set off something because it was clear it's going to be a tough road to hoe for private equity to raise enough money for these AI money losing companies
Right.
to actually get to the finish line of profitability. Anthropic said they're pretty close. But this means Anthropic and OpenAI get all the money that they want on their IPOs they already filed for.
That's right.
What are they going to do with the money?
They're going to write checks.
They're going to write checks. Who's getting checks? Are you ready?
Let's go.
Let's go.
We're going to start with, there we go.
All right. So the companies that are going to get checks, they went way up. Now the NASDAQ's up 20% so far this year after the success of that IPO, because all the AI stocks that are making money building the data centers are going to get checks. The Dow's up 8. Oh, Round Rock, Texas-based Dell up 242% so far this year. They're going to get checks building out what?
AI data centers.
AI data. They got the server equipment. Whoa, Micron. They're in the chips.
Yeah.
287%.
And if you look at their 2027 earnings numbers, relatively still pretty cheap. I'm just saying.
It's not as cheap as it was right here, Alex.
No.
Just saying. And AMD,
Up
they claim their
147%.
chips are better than NVIDIA.
Do they really?
Yeah, that's what they said.
Okay.
Yeah,
We'll
that's
see.
what she said, the leader, the CEO.
All right.
That was I'm just saying. So all these companies are going to get money, but I got to take a trip down the rabbit hole.
What do you got?
You got tech companies like Adobe, and they got AI,
Right.
right? And they're down 50% for the year. Salesforce, they have an AI agent that's supposed to attach and find out who you need to call next. And they're down about 50% for the year.
Yeah, there's been a big,
And Microsoft's down for the year 20%. Meta's down 15%. So the overall tech index I just showed you is 20%. But you got those that are getting checks up here and those that are writing checks, or see, we won't need software because AI is going to do everything. You're just going to put an AI on your computer and you won't need any software because AI is so smart.
right.
I don't think that's true.
Well, the other sector that's been beaten down quite a bit is fintech, right? Payment processors like Fiserv, Toast, which everybody's seen at the restaurants. Get your little handheld device, PayPal even. So we're seeing a disruption,
Everybody hates PayPal.
potential disruption
Nobody likes PayPal.
in those spaces. But I think you'll have some emerge using AI as a force multiplier. Our advice is always don't catch the falling knife. We got to see have some visibility for the next 3 to 5 years before you want to add something to the portfolio. But that's what we'll be looking for there.
Okay. So tech was down, about 10% at the start of Epic Fury,
Right.
right? So it's down even a little more than that for the year. And obviously that's changed.
Sure.
So NASDAQ goes from a -10 to a +20. Lickety split now that all the AI companies are going to get all the money they want because you got everybody, SpaceX, Anthropic, OpenAI. Whoa.
There is a lot of enthusiasm,
Right.
and they're spending almost $700 billion this year.
Well, one of the things that powered us is we've been building for years the energy infrastructure position, sometimes as cheap as 5 times cash flow or even a little cheaper than that.
Yeah.
And, well, boom, there's oil. So let's cover the drama. So oil's down from 110, right, at the Epic Fury apex, and we're back below 75, 73.65 this week for oil. Wholesale gasoline, good news on inflation, that's down 23% in a month.
That'll change
Still-
the CPI numbers and the PPI numbers going forward from here.
Well,
They'll get some relief.
not so fast.
What? Well, what do you mean?
Okay, jihadi whack-a-mole.
Okay.
So the Iran deal is signed, but you still got the Republican Guard, right?
Yeah.
The Islamic Republican Guard Corps, that's why it's IRGC.
Mm-hmm.
And they're not really known for
Being trustworthy?
being trustworthy,
There
I
you
would
go.
say. And then they got their friends Hezbollah and the Houthis. Now, Houthis they're like usually the first to pop off, or Hezbollah going to send a bunch of rockets into Israel.
Right.
First chance they get, because they don't like this deal. Now,
I don't think anybody likes this deal. Israel doesn't like it. Trump doesn't like it.
Trump Well, Trump made the point that if the Strait of Hormuz was not reopened, we were 4 weeks away from economic Armageddon, especially in Europe.
Yeah.
So the Strait, next week, this is one reason you want to subscribe, because next week we're going to cover how much traffic actually got through there. But wait, there's something more important. Here's the oil again, right?
Mm-hmm.
The oil executives, so executives from Chevron and ExxonMobil all came out and said, you know, if the Strait doesn't get reopened, we're getting $150 a barrel.
Yeah.
Then we read a great report this week. 1 billion barrels has come out of storage.
That's right.
And maybe half of that from the strategic petroleum reserves of Europe and the United States. But the United States is down near rock bottom. They can't go much lower or the equipment doesn't function.
That's right.
So the oil companies that borrowed oil to sell at the apex up here, right? They could, if you had oil on a boat, you could get $120 a barrel. And they borrowed from the Strategic Petroleum Reserve, promising to pay back 125%. So that's about 125 million barrels. It has to go in next year. That has to be replenished. Now you've got storage so low that we were 4 weeks away from kind of an energy Armageddon.
Yeah.
So you got to get the Strait reopened. Now, what happens the first time Iran or their friends Hezbollah and the Houthis violate the ceasefire?
You're going to see a spike in oil prices.
And you see jihadi whack-a-mole. This happened, remember, after 9/11.
Mm-hmm.
And everybody's like, okay, those guys were over in Afghanistan, so we're going to get them.
Yeah.
Right? And nothing happened for nearly 90 days. It was a long, I mean, it's like, when are they going to do something about this?
Yeah.
Right? They were strategizing and mapping. Now, the mapping's gotten more sophisticated.
And faster.
Everybody needed to reload, right? After the 2 rounds of strikes on Israel, including, or strikes on Iran, but including Israel, they needed to reload. Okay? So now you have a deal. You got 60 days, and IRGC probably doesn't like the deal. There's 32 different divisions of IRGC. They got committed jihadists in those divisions. They've still got some missiles. We found out after Trump told us that we just annihilated them all. But
right.
no, they
still have some.
They still have some. So when it gets violated, you could see 150 at the first violation as they go in for the 7 islands on the Strait of Hormuz. Right? You got Kasham, they hit that, threatened to take over Karg. Those, you know, and they've mapped, because the 7 islands have all the bunkers and the fortifications and the launch capabilities for the missiles and drones. They have to control those islands, otherwise, and the shoreline, I forget the name where the shoreline is, they have to control all that to control the strait, unless Iran says, okay, we got a deal. So they're supposed to give them some money, and the hawks are not happy about that. Let's talk about the future of oil.
All right, so we got 3 lines here. The white line is the futures curve right now.
Right? It says $70 by the end of the year.
The blue line is from a year ago, and then the orange line is from 3 years ago. So we're really mapping out how the curve has changed over time. And
you have a base that for an extended period is essentially $15 more.
That's right.
So you got, if you have energy infrastructure, you're going to get paid more for an extended period, and potentially you've got a spike back over at 100 when this deal falls apart because of bad behavior. That's my premise.
Yeah.
Now, and you're not dependent on that, because the companies make plenty of money at 70.
Yeah, I think it's going to be an interesting from a trading perspective. You're going to start building in a really nice range here, right? Everybody settles down, oil prices come down. You'll have companies that are worth buying at a nice price. Something happens, right? You have some bombs dropped. Oil price is going to spike. Those are going to spike too. You have a selling opportunity at those moments. So I think that price range over the next, you'll see that develop, and it'll be there for probably the next 3 or 4 years.
Well, you got 1 billion barrels that came out of storage. Let's say 500 million barrels was actually excess supply. Remember, the world was awash in oil, drill, baby, drill. And the premise that oil goes right back to 55 or 70 or 75, I get that. We're below 75 again. But notice the perspective is based upon deal, no deal. There's never really been a deal.
Yeah.
We've gone from, because we did a whole show, hey, the Strait's open, we got a deal. And then about
2 days later,
by the time the show aired, well, we posted it, but about 2 days later, that was wrong. So we learned it's not deal, no deal. It is an ongoing process of removing the capability to control the Strait of Hormuz, and it's not over yet.
well, I remember the calls for $45 a barrel oil, and the way my mind works, I'm like, what? That sounds like it's probably the bottom at about 55 and 60.
Next question on true, not true.
Yeah.
Okay? True. Gasoline prices are so high that we're getting a consumer recession.
No, untrue.
Not true. Retail sales in the month of May up 0.9%, 6.9% year over year. That means the consumer's just fine.
Yeah.
Now, you've always got the whiners at the bottom that get all the media attention, right?
Right.
Because they're going to whine no matter what because they're slackers. And so, or, kindly, some of them ran into trouble. I get
Right.
that. But that also says, what does that mean for the U.S. economy? GDP's 2.8% at the last estimate. Oh, and the Dow did go down 500 points when Warsh said, hey, we're not going to cut rates.
Yeah.
Well, people knew that because oil and inflation being arguably above 4%. But this drop in oil this week, you're right. The CPI numbers next round going to come in and probably starts to come down. But
Well, yeah, I want to say something on this real quick. So this CPI, this data really is kind of transitory, right? Because it's all driven by a spike in energy price. I want to make a distinction between that and what happened coming out of COVID. That COVID inflation was not transitory. Anytime you go through a huge money printing process, and Milton Friedman said this in the 1970s. I'm not telling anything, this is not new. But anytime you print that much money and put it in circulation, you're going to get inflation. It's just a fact. And I think that was the MMT theory in practice, and we see that now that it doesn't work. So let's not try that again.
all right, Warsh's not going to do it again.
Yeah, war's not going to do it again.
Anyway, well, the Dow went back to 52,000 briefly, and anyway, now we've finished with a reality check on the deal, no deal. We'll be back next week with the best in financial news. Be sure to subscribe. If we did a good job, hit the like button, and we'll see you next week. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio, and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and Past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.